Over $100 billion in Bitcoin is traded every single day in markets you are not allowed to see. And if you are trading the Bitcoin without knowing this, you are playing a game that was designed for you to lose. Every time you buy Bitcoin on your phone, your trade is public. The order book sees you. The bots see you. And sometimes the whales see you before your order is even filled. But when institutions move hundreds of millions of dollars in Bitcoin, they do not do it on the exchanges you stare at all day. They use private pipelines, over-the-counter desks, dark pools, direct deals with miners. So here is the real question. How can you win a game when you are only allowed to see half the board? If you are already asking yourself where that hidden $100 billion actually trades, support this video now so it reaches others who are still in the dark. Today's story follows two players. The first is Alex, a regular trader watching charts on a retail exchange. The second is The Fund, a quiet institutional player moving massive size through private channels. They are in the same Bitcoin market, but they are not playing the same game. Alex logs into his exchange and looks at the chart. Bitcoin appears calm, volume looks normal, nothing unusual is happening. A small green candle forms, a bullish headline appears. Alex decides to buy. His order hits the public order book, experiences slight slippage, and instantly becomes visible to bots and market makers. Alex feels like he is part of the action. What Alex does not see is that at the very same time, the fund has already been accumulating Bitcoin for weeks. Not on Alex's exchange. They are buying through over-the-counter desks, dark pools, and direct miner agreements. Their orders never touch the public order book, and they barely move the visible price. While Alex reacts to candles, the fund negotiates private block trades. Alex sees a chart. The fund sees actual liquidity. If you have ever wondered why Bitcoin suddenly explodes upward after days of nothing happening, that question alone can change how you trade forever. Here's how the fund keeps $100 billion in trading hidden from view. Step 1. Quiet accumulation. Instead of market buying publicly, the fund contacts an OTC desk and says, "We want 10,000 Bitcoin, and we do not want the market to notice." The OTC desk finds sellers, miners selling freshly minted coins, institutions rebalancing positions, large holders exiting silently. These trades are matched privately, often with custom terms, sometimes through direct miner contracts. The supply never hits the exchanges Alex uses. Step 2. Hidden execution. When exchanges are used at all, the fund employs iceberg orders and dark pools. Only tiny fragments appear on the screen, or nothing appears at all. To Alex, it looks like normal trading. In reality, a massive position is being built behind the scenes. Step 3. Narrative ignition. Once the fund is fully loaded, the story changes. Headlines turn bullish, institutional inflows, ETF demand, whales accumulating, influencers get louder, thumbnails get brighter, price begins to move. Alex feels late, so he buys again. Eventually, Bitcoin breaks out, social media turns euphoric, confidence spreads. Alex feels like this time, he is early. But here is what Alex does not know. The fund is no longer buying. They are selling, quietly, through OTC desks, through private venues, into fresh retail demand. Coins flow out without crashing the open market price. The chart still looks strong, order books still look thick, the story still sounds bullish, until it doesn't. The buying slows. A sharp red candle appears, then another. Panic spreads. Alex sells near the bottom and walks away thinking, Bitcoin is manipulated. From the outside, it looks like chaos. From the fund's perspective, it was a clean cycle. Accumulate in private, let retail push price in public, distribute quietly, let the chart take the blame. Here is the hard truth. You will never have the same tools as a billion-dollar fund. You will not get dark pool access, you will not get custom miner deals, you will not have a dedicated OTC desk, but you can stop believing that the chart is the entire market. You can start asking better questions. Why is price stable while fear dominates headlines? Why is price moving vertically on good news when smart money usually sells strength? Why are on-chain transactions declining while average transaction size increases? Your edge is not speed, it is patience and skepticism. You do not need to catch every move. You only need to stop being the liquidity that smarter money exits into. If you want a full breakdown of how to build a strategy that respects this hidden structure, not a get-rich-quick scheme, but a real framework, stay with this channel, because once you understand this, you will never look at a Bitcoin chart the same way again. Before you leave, if you are done trading stories and ready to understand structure, subscribe and comment "I'm done trading blind," because once you make that decision publicly, you don't go back.